Welcome to this week's update on the hedged option portfolio. At the end of the previous video, I had several short puts expiring on the Friday, and I was waiting to see whether they expired in the money or out of the money, and therefore whether I needed to roll them. The strikes were 62, 60 and 58k, and the settlement price last Friday was around 55,600, meaning all of the short puts again expired in the money. While short puts remain quite deep in the money, they behave similarly to a long position in the underlying. This results in a positive delta, which I'm fine holding, but it does not provide much theta, as theta is greater for options that are closer to the money. While the puts keep expiring in the money, I keep rolling them for a credit. Where possible, I use some or all of this credit to roll down in strikes as well, though this isn't always possible. And I also sell calls against the positive delta I'm already holding, to bring in some premium. I'm already short the 59k call on the 12th expiry, which is already almost worthless. So I'm going to sell another call in the Friday expiry, which is the 13th. I'm looking for something in the region of 30 to 35 delta again. I'm going to go slightly more aggressive and go for the 57,000 here. It's a decent priced order there, so I'm just going to cross the spread. So now we've got that short call on. As the call on the 12th has already lost most of its value, I'll see if I can close this for a few basis points. Not getting a fill yet, but I'm going to leave that order there to close it for 3 basis points. As we've got a little more aggressive on the 13th, the call on the 13th, I'm happy to just pay a couple of basis points to close this, so we've got less risk to the upside. Another thing I wanted to show this week was executing via a combo. As I've mentioned in previous videos, the main strategy of this account involves selling very short dated options, and this is always at least partially hedged with much longer dated positions. On the downside, this is just some long puts. And on the upside, this is currently a 120-160k bull call spread. The size shown currently is 0.2. I'm going to show a video clip now from earlier this week that shows how I added to this bull call spread via a combo. I could just trade the individual options, of course. However, because these much longer dated options aren't traded as much as the shorter dated ones, it takes longer to get filled in the middle, particularly if you're trying to get fills on more than one instrument. This makes structures like this ideal candidates for using combos instead. For those not aware, the combos, as they're named on Deribit, are multi-leg structures, such as a bull call spread, that are executed in a single order book with a single order. At the moment, combos are still executed on a separate page, though I expect this to be possible directly from the option chain eventually. To get to the combo page, we go to the strategy menu at the top and click BTC under combos. This takes us to the combo page, which has 2 tabs. One is a list of all currently active combo order books, and the other is for creating a new combo order book. So first I'm going to create the order book for the 120k, 160k bull call spread, and then I will trade it. In the Create Combo tab, I select Call Spread, then the June expiry, and then the 2 strikes of 120k and 160k. To create the order book for this combo, I click the RFQ button. The order book for this combo has now been created, and it can be found in the Combos List tab. Clicking on it opens the order book. Sometimes quotes from a market maker will come in straight away, but sometimes it might take a few minutes, especially on the longest dated expiry, which less traders are looking at in general. You can see here that the order book is currently empty, but that doesn't stop us from placing orders in it, and I usually like to test the waters with an order that is close to the mark price. You never know, someone's bot might want to trade it there, so there's no harm in trying. You can see the direction of all the legs being traded under the buy and sell buttons and again on the confirmation pop-up. In this instance, my order doesn't get filled, but it does trigger another bid to be placed by someone else's bot. After waiting for not very long, no one has taken me up on my mark price bid, which is not very surprising. So I decide to increase the bid to 0.029, so a bit higher than mark, and this does get filled instantly. Notice that this price that I got filled at was nowhere near the best ask. So even if a decent quote doesn't get posted into the book straight away, it's still possible to get filled at more reasonable prices if you place sensibly priced orders. Now if we go back to the option chain, we can see the quantity of the bull-call spread has increased from 0.2 to 0.3. Only a small adjustment for now, but it's still a decent quick example of how combos can be useful. The process of trading combos on Deribit is still a bit convoluted compared to trading on more traditional option platforms, but a new flow for combos is thankfully already being worked on. I'll cover that in great detail once it is available. That's it for today's video. Thanks for watching, and I'll see you next time.